Last week the Fed hiked, but their language softened in their statements, suggesting no more hikes. Further evidence that the Fed is likely to cut interest rates this year was in the CPI report, which indicated inflation was cooling in the US. Market expectations for rate cuts this year have risen from 50 basis points to 75 basis points over the last 10 days. We believe the first easing will likely come in September. Meanwhile, Christine Lagarde said that the fight against inflation isn't over and could face significant upside risks, while the ECB has been stressing that the hikes aren't over yet, with further strength in euro and Bitcoin likely as a consequence, as the US dollar is likely to weaken in the second half of this year. There is a dichotomy of views on Ordinals, Bitcoin's version of an NFT. Is it weighing on sentiment towards Bitcoin? Some say it's a great use case for Bitcoin, while others say it detracts from its primary use as a store of value. We believe it can be both. It is a store of value with unique operability features that can be utilised in a very diverse way. Ordinals have generated $30 million in fees from a total of 5.2 million inscriptions so far, with no sign of a decline in inscriptions. Ultimately, we believe it is supporting the network. As a consequence of the Ordinals activity, mining Bitcoin is the most profitable it has been since the 2021 bull market. Interestingly, it represents the first time transaction fees exceeded Bitcoin supply, and it is a test case that demonstrates how Bitcoin can work with lower mining rewards, particularly with the upcoming halving in May next year. We have noticed that Bitcoin mining equity prices have fallen, while their income is up quite strongly. It feels as if there's quite a disconnect between analyst and investor views versus the improved miner profitability. We will continue to follow this disconnect. Join us next week for more market insights.